Okay, everyone, it is Fed Day. Well, that means the Fed is going to come out here at 11 o'clock Pacific time. Likely not going to raise rates. I'm pretty sure the market consensus is they're not going to raise rates. And this Fed pretty much doesn't like to surprise the market. So, in this video, what I'm going to do is cover the technical analysis of the charts, pre-Fed, and then if any, we'll probably do an end of the day video depending on kind of how the market trades out after the Fed comes out. There is the potential for a big sell-off today, so I want everyone to be aware of that and be ready to, potentially take positions. I'll be watching for that. So I'm going to point out what I see. Starting off with the triple Qs, we'll look at the daily chart, which is more significant than the shorter time frames. And I think it's a good chart to really evaluate March 2020 lows. This trend line right here, coming off the March 2020 lows, you can see we held support. We finally got a sell signal. So I'm looking at, I'm really expecting tech, triple Qs, to sell off. Now, it might not sell off today. There's a couple ways that this could go, at least today. But I am thinking that we're going to get an opportunity to take a good objective short trade on triple Qs. And I don't, today could be a long day. You might be able to day trade to the long side on a rally. But I do think at some point here pretty soon, we're going to get an objective entry. So what I see is this is your sell signal or your break of trend. And we have negative divergence. We had it building for a long time. Negative divergence was building. You can see it on the RSI and the PPO telling us we're going to break trend. Well, typically when you break trend, you don't just break a little bit like this. You don't just get a little break, come down, and then that's it, off to another leg higher. This is telling me that this is just the first move within the new trend, which I see to the downside because we broke the uptrend. All right, so you get a move down, and this is a big back test. This has made a new marginal new high right here. We got a new all-time high in tech on less momentum down here. You can see here how the momentum is less or a lower peak than the former, okay, and higher price. So negative divergence. Now here's one way I want to evaluate this. All right, if the Fed comes out and the market rallies for whatever reason, it doesn't really matter what they say necessarily. Just watch what the market decides to do. If they rally, there could be the potential for the market to rally all the way up here to about 350 in tech. All right. If we get up there around 350, that's a very objective area to short tech. So watch for that. That's one potential way. You could potentially day trade this up to 350 and then short it or flip short up there. Now that would be about a 2.5% move, big move, but obviously Fed days have potentials for big market movements. And this is the area right up here that would be very objective to short. It would be a full back test of this trend line with a negative divergence, and that's the area that I'm looking to short Qs. So that's one way to play this. Now, if the Fed comes out and says something the market doesn't like, then we'll narrow it down to the 60-hour time frame to get a little more granular. So on the hourly chart here, you can see we've got this uptrend line now. Just over the last couple days, created this uptrend line, and today we're basically resting right on that trend line. So if we break the trend line, we get an impulsive breakdown and an hourly close below there, then likely tech has started its next sell-off or its next move down. All right, so that's what I'm watching for. And you can see here's that shorter term time frame on the daily chart. So it can go either way, but if we break to the downside, I'm looking at this as this was a breakdown or a sell signal on the larger pattern, which is this large uptrend from March 2020. And over a year-long uptrend, we broke with the sell signal, and this was a back test, and now we're going to start the next leg down, likely going to take out the lows on this next leg down right there. We're likely going to go below this level of about 316. All right, you take out the lows, and we've got probably a ways to go. I think down to about 296 area or somewhere down there. Okay, so that's what I see on the Qs, and that's not going to happen all in one day. It's just going to start the trend to the downside. So that's really breaking it down play by play. SPY, I'm not, SPY is going to do what Qs does, most likely. So we're going to watch that. One thing you'll want to watch is, if SPY breaks down, starts to sell down, I can see SPY selling down to 412, somewhere right in there. And you could get there today. That's very possible. Another one to watch is the financials. So the financials have broken down. So you have this bearish rising wedge uptrend. You had negative divergence building for a while. We got a sell signal or a break in trend. Now the financials could backtest. Maybe the Fed comes out and says they're going to hike rates. And if they say that, then tech should sell off and the financials could rally into that. So financials have the potential to run up and do a backtest or something like that, and then continue to break. You have to look at the larger patterns. If you've broken the major uptrend line, there's opportunities for kind of rotation between sectors, but still keeping the bearish technicals. You broke this pattern, and if you rallied and did a backtest, you still have not recovered this former uptrend. All you're doing is backtesting, and then you're likely going to fail. So if tech's selling off and maybe financials are rallying a little bit, then the financials will start to break, and eventually you might have kind of a consistent trade across all sectors where you're getting a broad-based sell-off. And that's really what I'm expecting, to be honest, is a broad-based sell-off. I don't know if it'll happen today. Today with the Fed, it can be pretty choppy. But I am thinking we're going to start a broad-based sell-off here pretty soon. So watch those financials and watch tech. Those are really the two key ones that I'm watching. Industrials look very similar to tech. They were strength in the market over the last few months. Uptrend line here. Negative divergence at the top. You can see those divergent highs where we made new highs in price, and negative divergence on the RSI and the PPO. We broke trend. So again, this could rally and backtest while tech is selling off. We might see some rotation where all of a sudden these are strong and tech is weak. That's what's been going on for the last few days. There's been this flip-flopping where tech is strong and the industrials are weak, and then one day tech is a little weaker and the industrials and financials are strong. It's this flip-flopping between these sectors. Now, when you start to see those sectors line up in a common direction, which I believe to be the downside, given the negative divergences and the breaks of the uptrends, then we'll see a broad-based sell-off. That's what I'm expecting. We have a break in the major trend in XLI, the industrials. We have a break in the major trend here in the financials. And we had weeks ago a break in the major trend in tech right now. Here's the major trend there. There's your break right there. So all of those, we have a break. They're all, they've all been kind of doing back tests or just kind of hanging out. But I do think we're likely going to start to see those line up to the downside and get that broad-based sell-off. So you'll want to watch the VIX. This is when you get the broad-based sell-offs, that's when you get spikes in the VIX. So we'll look at, we can start off with the standard VIX. So the VIX, just quickly look at that. You've got bullish divergence that's been building for a while. I've had that marked out, and that really hasn't gone away. You have bullish divergence. So as we continue to drift lower in the VIX, the momentum continues to hold bullish divergence, kind of building bullish momentum while the prices continue to drift lower. So this is, that's a setup telling you that you're likely at least going to get some sort of a spike, all right, higher in the VIX. Doesn't mean we're going to get it today, but there is that potential. What I'd like to line up any VIX trades with broad-based market moves. All right, the VIX will move when the SPY moves one way or the other. But it is set up bullish as the SPY is set up bearish with its negative divergence. Okay, a couple individual trade ideas. And before I get started on these guys, leave me a thumbs up. Just hit that thumbs up. I'm putting a lot of thought process into this and really just putting it out here for free. So you guys help my channel grow. That kind of helps with my time, and then also check out my training course. If you guys are interested in learning this skill set, I put together a course, and I did it really based on subscribers asking me to put together a course. I was hesitant to do it in the beginning, and I finally did it. I put it out there, and I've heard a lot of positive comments that it really is a good, helpful course. It's no frills. It's just all information. So check out that course, link in the description below of this video and any other of my videos, basically. All right, guys. Now, trading idea, MGM. All right, so clear uptrend line here on MGM. And you can see moving in negative divergence on MGM. So that's been building for a while. As I zoom in, we're starting to crack this trend line. I can adjust the trend line slightly. The thing is that, you know, I can probably adjust it down like this. And we should probably just do that, give it the benefit of the doubt. But we're right there. We're resting really close to the trend line. It looks like we're about to break, but nothing's going to move right before the Fed. So we got to wait for after the Fed. You have to understand, major institutions aren't going to take positions right before the Fed. My alert went off because I moved my trend line. So we have to wait for after that. But if you see this start to break, there's a trade idea. And I got some support levels down here at 32, 31.90 or so. That's really the first level that I see as kind of a solid level. And there's another level right here, kind of a minor level. We'll just mark that out, what we have right there. 36.50, 36.56 basically. So if we get a sell-off, we'll probably run right down to that 36.50 and hold there for a day or two. But break of that, you get down to about 32, and then the potential to get all the way down here at 23.50. Okay, and obviously there's potential for a lot more, but we'll just keep those on our radar for right now. Another one, Mastercard, just hugging the trend line. So Mastercard, you can see it coming off the March 2020 lows. This is kind of a financial stock. Has not cracked yet. A lot of these financials have cracked. Mastercard has not yet. So I think it's going to go. But you can see uptrend line right here on the daily. Clear negative divergence on the PPO and the RSI. You've got kind of an equal high here, but on a much higher price. So negative divergence on both momentum indicators. These are indicators that tell you where price is likely to head in the future. It doesn't give you a guarantee, but it tells you that price is likely to head head in this direction in the future. And then you got to wait for certain breaks of support, right? So again, this is all in my course. Now you can see what we've been doing over the last, going back to May pretty much. We've just been hugging this trend line every single day, going nowhere. You can see zooming in, look, they started to crack and the buyer stepped in, all these wicks. So they're trying to hold it, but it's looking weak from my perspective. So just need a little bit more push, and we're likely going to get that push from the Fed. And we'll likely crack. Support levels, I tried to look at this one to really narrow down these support levels. I think it's not as clean of a chart. It's a little choppy. I think we got something right in this area. Right about there, which is about 322.42. And it also looks like we've got another kind of level right about in here. Let me just mark that out, which is about 357.80 or so. If you wanted to wait for a break of that 357.80, that would probably be the best or most conservative. But if we do that, we're likely heading down to 322 level. Okay, flipping into a different sector, JCI, Johnson Controls. This one looks like it's about to break too, but they're still, again, nothing's going to happen before the Fed, so they're just kind of hanging on to the trend line. Coming off the March 2020 lows, clear uptrend line right there. As we zoom in, bearish rising wedge. And we've got negative divergence on the RSI and the PPO. All right, so clear sign of negative divergence and bearish technicals across the board, basically. But we're still hanging on to support because it's waiting for this catalyst. And so again, if we break, start to get an impulsive red sell signal or breakdown, that's likely going to set us up for a move down to the next level of support, 62.32. And we crack that, I think we're heading probably straight down to about 52.55. And below that, we've got another level at 47.88. So those are some levels to watch. Again, the way it works typically is you get a sharp move down, you bounce off support. chop around there for a little while, then you break, move down, bounce off support. So it doesn't go straight down. You just fall down to these support levels and then bounce. Okay, that's another one. LPX. This one's starting to break, but again, it's right before the Fed, so it's a little suspect. I did talk about it in some videos. It's just right before the Fed. I don't trust anything breaking down or breaking out right before such a pivotal meeting. So, you know, I've got a starter short position on this. It's pretty small. I'll add to it if we get confirmation. Clear. This comes from April 2020, but clear uptrend line. This is a potential head and shoulders top. I've got it marked out there. But clear negative divergence. Look at that momentum just completely collapse on this PPO and RSI. And we basically, this was a divergent high here, and that was it. You know, this was your divergent high. We're starting to break the trendline support. It's just not super impulsive yet, and that's because of the Fed. So if the Fed comes out and this thing, you get that big breakdown, that's a sell signal. Otherwise, they could pop it back up and recover it. Things to watch for on that one. Yeah, I'll flip back to this VIX. I talked about the VIX, but this is VXX. You can't trade the VIX directly. You have to buy these VIX options proxies. But here's another one, VXX, and you can see bullish divergence right there. Let me zoom in on this PPO. See that? Starting to turn up right there on the PPO on the signal line. And you've got lower prices. So bullish divergence building. That tells me we're likely going to get a move higher, which is telling me broad-based sell-off. So here's your first level of resistance up right there about 3609. And that would be a move just to up there. That's a move of about 14% or so. So we might get that today if you get the broad-based sell-off today. And then a break above that. You know, I don't see a whole lot above that until we get all the way up here at a roughly 65.36. So those are the levels I'm going to watch for right now. We do have a reaction high. We should probably at least mark out the reaction high right there, which is about 48.50. All right, so there's some levels to key off of. If we get that move and that broad-based sell-off, the VIX should spike. So I've actually taken a small position in the VIX just to start. I do think we're going to get that broad-based sell-off. I am seeing, you know, signs that that's going to show up. Doesn't mean it's going to. I'm front-running it a little bit. But again, it's a starter position. And I don't load up on the VIX. I never completely load up on the VIX. I'd rather take the VIX for me is icing on the cake. You know, if I'm going to short, if I think there's a broad-based sell-off, I'll short tech, triple Qs, I'll short the small caps, and then I'll sprinkle some icing through the VIX. All right. And we'll wrap up with gold. Gold, basically, we've got, I think we have the potential to fall down to 1,800. I really see that as a great opportunity to buy gold. So if you get some sort of a broad move down in gold because the Fed hints at hiking rates, then I think we fall down to about 1,800, and that's the area to start buying gold, at least from my opinion. Again, everything in this channel is just my opinion. I'm not giving trading advice or financial advice, but I do, that's what I'm going to be looking for. So some of these miners, like this one, Anglo Gold Ashanti, you can see it's just hanging right there on this support line. I think we're going to hold in this area on this one. Some of these others, I think we have a potential to go down a little bit more. HMY is actually... This one I haven't covered for a while. I'm still long this. I've just, you know, I wrote it. I've been buying it all the way down here, 378. I wrote it up. I didn't take any profit, and have been writing it down. It's a smaller position, and I'm trying to ride this for a longer swing trade. So trying to add to a position on buy points. If we fall down to 408, that's your next buy point. That's what I see. That's a major level of support. So drop down to there. I'll probably add a little bit more to that. Again, I'm looking for a move, kind of the next leg higher in gold. So I think we have the potential in the short term to fall a little more in these miners and gold, and then you know, and then continue what I see as a more major leg up in gold. Okay, guys, that's all I got pre-Fed. So I'm going to get the video out, and we'll touch base at the end of the day if anything crazy happens. If nothing happens, it's just a no news event, you know, and the market doesn't really move. Maybe pay attention. You know, we might get the move tomorrow. Sometimes you chop around back and forth on the Fed day, and then the move starts the next day. So if anything crazy happens, I'll put out a video at the end of the day if any technical changes. Otherwise, I'll catch you guys on the next one. Bye.